I guess I just want to, among other things, I want to point out that I think the extreme level of inequality that we see today, this incredible rise of income at the top, while the rest of the population has really been stagnant, as Neil gave some numbers on that. I think that Canadians, by and large, don't really know that story. Essentially what's happened is all the income growth in the last 3 decades has gone to the top. It's gone to the top 10%, but it's particularly gone to the top 1%. And the higher up within that 1% you go, the bigger the economic gains are. So for instance, 30 years ago, the average CEO typically had an income that was 20 to 30 times the average wage. Today, that gap is that the average CEO has an income that's roughly 200 to 300 times the average wage. The top hedge fund managers, in the financial business, the gap is even more extreme. For instance, here's one statistic that always stuns me. In 2009, that's after the financial crash, the top 25 hedge fund managers earned, on average, $1 billion each. Okay? And that, by the way, is not 200 or 300 times the average wage. That is 24,000 times the average wage. And by the way, some of these numbers are American. The case has been most extreme in the United States, but it has been very much the case here in Canada as well. In the last dozen years in Canada, for instance, while the incomes of ordinary people have been stagnant, and you may not feel that the incomes are stagnant, but you probably do feel that they're stagnant. But in case you're doubting that, don't forget that people in the middle class are basically working twice as hard as they did earlier because, of course, they have 2 incomes, whereas 30 years ago was not unusual to have a single family income, or 1 income for a family. Anyway, while this has basically been stagnant among ordinary people, in Canada in the past dozen years, the incomes of the top 50 CEOs have risen on average by 440%. Just a staggering increase at the top. And our sense, and I'm sure you got this clearly from Neil, our sense is this is just a dramatic change. This is a dramatic change that cries out for some kind of justification. You fundamentally change how money is distributed among the people in society, and nobody kind of even comments on it. And you raise it and you're considered some kind of weird radical or something. We think it absolutely cries out for justification. Now, to the extent that there is a justification out there in the business press, it tends to be that the people at the top have to have these big incentives, right? They have to have the incentives so they will perform to optimal capacity, that this is really necessary for the success of our economy. So you would think, given the huge rewards at the top, that the performance must be just staggering. I think you know where I'm going with this. Let's just give you a couple of quick fun examples. Hank Aaron, the best baseball player in the early 70s, terrific baseball player, was making $200,000 a year, which was the top salary in baseball. Today, Alex Rodriguez is the top player in baseball. If you adjust for inflation, he's making $28 million, but I want to adjust for inflation because otherwise you might think it's just inflation. But if you adjust for inflation, Rodriguez is still making 30 times what Hank Aaron made. But there's no evidence that he's 30 times better. In fact, there's no evidence that he's better at all. And he's got steroids. And you see this kind of example, in fact, throughout sports, throughout entertainment, throughout the business world, throughout the financial world. In the 50s, for instance, General Motors, the CEO of General Motors, was making what would in today's dollars be $5 million a year. But he was presiding over one of the most successful companies in the world, highly profitable. By 2007, the CEO of General Motors was making 3 times what the guy had made in the 50s, but he was presiding over a company that was millions of times worse. In fact, by 2007, GM reported a $39 billion loss, and yet the pay just kept ratcheting up. Or it's even more extreme in the financial sector. I don't know if you remember that in 2009, after the terrible financial crash, the head of Merrill Lynch gave their top executives $4 billion worth of bonuses. This is right after this top team had just steered the company to $29 billion in losses. And I think some reporter asked him, why are you doing this? And he said, well, we have to do this to keep our most talented people. Which makes you wonder what some of the less talented people they had might have done. But our point is that when you look through the evidence, there's just simply no evidence of a justification for this enormous run-up at the top. Today's top earners are not more talented, they're not more creative, they're not more hardworking than the top earners were 30 years ago. They are not worth 300 times, 200 or 300 times what the average income person is working. They're certainly not worth 24,000 times what the average worker is earning. In fact, we argue that there's no justification. What basically has happened is there's been simply a kind of a coup. That in effect what's happened is, this concentration of income at the top, this huge income, is the result of a massive, masterful political campaign to get more for themselves. And how did they do it? Well, you know what? I'm going to throw in a list here. Okay? Well, I'm just going to quickly say that, Neil, 4 items I want to draw your attention to. Basically, this is our point, that it's not something haphazard. It's a deliberate campaign. And we identify, for instance, changes in CEO compensation, stock options principally, very, very key factor in driving up wages. Changes in ideology, the ideology of neoliberalism that basically encourage the encouragement of greed and accumulation at the top, and the kind of tolerance for greed in society, which was not the case 30 years ago. Very crucial changes in the tax system that drove taxes down for people at the upper end. And also, fourthly, the changes that have disempowered labor, because by disempowering labor, that has empowered capital and has allowed capital to basically trample on the rights of so many working people. And so what we argue basically is that this enormous concentration of wealth at the top, it's kind of a scam, really, what's happened. And partly the reason it's a scam is because they haven't been honest. The group at the top that have orchestrated this big change, it's not as if they came out and said, well, we're greedy, we would like more. They don't say that. Instead, they couch it in terms of, it's an economic necessity. You have to do this. You have to cut taxes on the rich. If you don't cut taxes on the rich, you will destroy the economic performance of your country. You'll gut economic growth. You'll limit economic growth. And therefore, in the interest of all of us, we have to cut taxes on the rich. That's the way they sold it to us. Well, as Neil has pointed out, that next time somebody makes that argument to you, one of the things you can say is, well, after you say "Go Flames, go," then the next thing you say is that in fact, high taxes, there's no evidence that high taxes actually do anything to destroy economic growth, because, in fact, if you look at that post-war period, 1945 to 1980, the taxes on the rich, as Neil's mentioned, were incredibly high. The marginal tax rates were 80 and 90%, both in Canada and the United States, and yet both in Canada and the United States, those were the periods of greatest economic growth in our countries. They were vibrant capitalist economies. So you cannot argue that the high taxes destroyed economic growth. It is simply refuted by the evidence. And in fact, strikingly, since the taxes have been reduced since 1980, and they have been dramatically reduced since 1980, we mentioned there was marginal tax rates as high as 80 and 90 to, in fact, above 90% some years. They're now down to the top marginal tax rate is 46%. Dramatic reduction. And yet, since that's happened, economic growth has slowed down as well. So the lower taxes since 1980 have not produced the big cornucopia that we're always told about. Now, the other big argument, of course, they always come out with is that if you have high tax on the rich, they'll leave, right? They'll leave. Well, I was going to say, when people say that, and your point is, but this is actually a huge topic, and since Neil talked so long, I don't really have the time to get into it. But let me just say, some will go. So they will, and they'll be very noisy when they go. The truth is, most won't go, because most people actually make decisions in their lives for more reasons than just the rate of tax. They like to live in a country because their families here, their friends, whatever. We actually have some interesting arguments in the book about how to deal with the problem of tax havens. And maybe we can talk about that in the question period, but I won't get into that now. But I guess the real point I wanted to make is just simply to raise the point. It's interesting the way we just let them hold us hostage like that. I mean, imagine if another group in society, not the rich, another group, let's say plumbers, or electricians or something, said, threatened to leave the country unless we did exactly what they wanted. Would we immediately kind of submit to them and just do what they wanted? I mean, it just seems a curious kind of approach that we don't think, isn't this odd that we're being demanded to do these things? And if we don't, they're going to threaten to leave, and that we sort of think, well, then we better do it. Now, I have this whole thing I want to talk about why Bill Gates doesn't deserve his fortune, but I think maybe I don't have time. Do I have time? She said not many Bill Gates fans here tonight. Okay. Well, all right. What I want to say then is that that today's reflection, or today's concentration of income on the top, is a reflection of what we called, or what could be called, the great man theory, right? The idea that there's certain individuals who are just so talented and so much better than the rest of us, that kind of all by themselves they make great things happen. And if they were to leave the country, we'd barely be able to figure out how to turn the lights on. And this notion is therefore, that because these people are so talented, they really deserve their billions. And in fact, this kind of theory is often advanced by billionaires. So for instance, here's just a couple of billionaires. Here's Leo Hindry, who invented a sports cable TV network. He said, "I think there are some people, including myself, who are, because of their uniqueness, warrant whatever the market will bear." One of the things I like about billionaires is their modesty. Or here's Sanford Vail, a big Wall Street tycoon. He says, "In the last 25 years is an incredibly unique period. We didn't rely on somebody else to build what we built. We did it ourselves." Really, really, really. That's an interesting thought.